Good day, fellow investors. The comments exploded, and also on my research platform, people asked, Sven, what about Intel now? You always said that when it reaches 80% of book value, it is the best time to buy. And I never bought because it was always higher than that book value, which is something, a rule of thumb that you look into those semiconductors cycle. And now we are there, unbelievably, but Intel is trading below 100 billion of market capitalization and below one-time book value. We discussed Intel a few times over the last few years. We even made one profitable trade on Intel when it was cheap just a while ago, and now Intel is cheaper than it was back then. So let's see what's going on, and let's start by looking at the last earnings presentation with Pat and David there. Their summary is pretty much what has hit the stock, how they are going to now work on cost reductions, better application of each dollar invested, trying to get some return on the money they spent, and we'll discuss how much money they've spent towards the end of the video and what are the returns on that. With Intel, there is always this promise about the future, but somehow it is never delivered. Now we have a 10 billion cost reduction plan. Last year we had 25 billion of investments, foundry doing it all themselves and therefore taking the market by storm, and etc., etc. Suddenly it doesn't work, and now we are going to cut 15% of the workforce. We're going to save 10 billion, and then again, if you look at it, 10 billion on 100 billion market cap, well, that's 10%. That should do well. Also, half capital investment funded to offsets and partners, but look at this. Intel's net spending is going up, partners is going down. So partners are backing out of those deals because it simply isn't a return on invested capital. Especially with the treasury at 5%, why should you invest in something risky and not even get a return? However, they're always promising, they're always doing, learning, whatever, but it somehow fails to get that traction, and that can be seen in the gross margins. Down, down, and down. Earnings per share actually turning into a loss, because if we discuss earnings, I've made this video a year and a half ago already, how because of their change in accounting, depreciation, where they suddenly said that their machines and everything that are not profitable anymore are worth more and will be used for longer so that they can show some kind of profitability, I called it a fraud, and I was pretty correct on that, and we have seen the developments over the last year and a half. The thing is that they have pushed gross margins higher a little bit, but then the market and everything, they used the last straw there, but then reality hit back, and now we are back into negative territories, and also the market and analysts are uncertain on when will this ship turn into profitability. Plus, we have now not just Intel, but also foundry that's siphoning a lot of money, and we don't know whether they will be as competitive as Taiwan, because they have been doing it for ages, and now Intel wants to reach the same competitivity and profitability, if not higher, and some issues, delays, this and that, customers left and right, pricing, and then you don't get a return on your investment. And they are investing big into it, and despite the investments, revenues are again expected to be down for the next quarter. Gross margins again down, and now we are even, despite the accounting shenanigans and changes, we are even going into losing money. And now something very important to show you. This is from the 2022 investor meeting. This was the presentation from Pat. He said that now 2024, 2025, it should have been a transition to 10 to 12% yearly growth in revenue with higher gross margins that should have pushed into extreme profitability. This was the plan. 74 billion of revenues, add 10, 12% growth. The next years, Intel was planned to reach 100 billion in revenues by 2026. It was the next great growth story, high growth markets, sustainable competitive advantages. This was wrong for Intel, 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 and innovative ways to unlock shareholder value. So Pat missed on all the projections there, but again, we have to see what do we get for the current stock price and whether it is a good investment now, despite the misses from the past. But still, I've looked a little bit at the conference call transcript, what's going on, and they are now trying to, instead of speaking of growth, they are now trying to save 10 billion somehow. They discuss how they will cut employees 15%. That's a big cut for a company. They will spend less money, they will work better and turn around. They had made forensic analysis and all that the management can say. They are spending much less than usually planned, a reduction of 20% from the plan entering the year already, reflecting expectations for softer second half demand, but they are still spending and spending a lot of money. And we don't know what will be the returns there. They are suspending the dividend. Whenever there is a dividend cut, that's never priced in, and the stock crashes, as we have seen. Add a little bit of bad guidance, uncertainty, risk, high investments, cash flows negative, and then you get what we are seeing now. Again, with Intel, there is always the promise, savings by 2025, sustainable model going forward, AI, all their products that they are showing, but it always looks like throw spaghetti at the wall, see what sticks, and then we'll see it. For now, not much is sticking with Intel. Then they explain why they have weaker than expected gross margins, because that is a shock, because they had been telling us that gross margins should be improving or at least being stable, but there are 4 reasons: shifting this, producing in Ireland, etc., etc., but also market weakness for them. And then, yes, they are having some cash flows, but if operating cash flow was 2.3 billion and then you have gross capex of 5.7 billion, you know that it is negative cash flows, and they need to keep investing that money to keep their business at least some kind of competitivity compared to others. Guidance was weak, China spending, etc. And again, they say that everything is great, we will be in a great position to see meaningful gross margins expansion in subsequent years. Always promises, always something down the road, which is not happening. On the Q&A, well, they always ask, what's going on? What are the competitors? Why are they doing better than you? And then the management always says that in the future we will be competitive, we will be more, we will do this, we will do this, but somehow it's not working, and nobody knows when it will start working. Are there any structural changes, and what's the outcome to your financial targets might be? And then they say they are doing the forensics, this clean sheet analysis concurrent with the rolling out of our new operational model. So you are on that operational model since 2021, and now we have new. And now they are even from the next growth story. We actually don't need a ton of growth to see our model play out, both in the kind of medium term and long term in terms of gross margins and operating margins. And if we do get the growth, it puts us in an even better position. This is crazy because Intel was the next growth story, remember here, and now we'll maybe get to 50 billion in revenues from the year. Not 100 as expected, but 50. So they have lost a third of revenue, and on that third of revenue that should have pushed margins higher, those margins are even lower after losing all of that revenue. That is crazy, that is insane, but it is what it is. And after the forensics, better position, the CFO says that the good news from 2026, as always, somewhere in the future, improved cost structure, but new technologies and this and that, but they are still outsourcing to Taiwan Semiconductors, and I am really curious on whether they will ever make it profitable or be competitive with Taiwan into the foundry business. It's very hard to just throw money at something. They have already shown that they are failing at it, but they got the grants, they got the money, they have to do it, but the return on capital isn't there, and now we are at below book value. Because when you look at book value in the semiconductor cycle, if you look at the price to book value, this is of Micron, and then you see, okay, when it goes below 1, below 1, below 1, that is the best time to buy the stock, and then you can expect a 2x on those buys. So that was for Micron. With Intel, now we are, yes, at below 1, and the last time it was below 1, it was a great time to buy a stock for, I think it was not 2x, but almost, and historically it has been a little bit higher, the price to book value, but also the profitability was higher. However, when we come to price to book, we have to analyze what is there in the book value. They have 27 billion of goodwill. So if the total equity is 120, 27 billion goodwill, Altera and Mobileye acquisitions are there the key. But now we can argue, are those businesses as valuable as they paid for them? We'll see about that only in the future, but one thing is certain, they do have this 50 billion of debt with the short-term debt, a little bit more than 50 billion. So they have taken a lot of debt for all of those investments, and those investments are not leading to returns. Because if you look at their capital expenditure, the market cap is now 100 billion, the book value is something like that, and they spent 25, that's 50, plus 20, that's 70, 80, 90, 100 billion on capital expenditures in the last 6 years, and they are still planning to spend 20 billion. So they spent more than the market cap in the last 6 years, and there is no return from that 100 billion spent. Thus, Intel has missed the strategy, has missed the situation, and therefore we don't know what the outcome will be. Everything was alright, then Pat came, and now the profitability is down, revenues are down, gross margins are down, because the transformation, when everyone was saying Intel is too boring, just dividend company, now it is transformed. It certainly isn't boring, but I don't think that shareholders are happy. And the key thing I see with Intel is perhaps this. Nvidia market cap 2.7 trillion, so they can just issue a little bit of shares and they can have 100 billion to spend on Capex. Taiwan Semiconductor 700 billion, again, they can invest as much as they want into competitiveness, and plus they have the know-how, they have the cluster, they have the historic knowledge, and I find it very difficult for Intel to compete in their environment. Of course, now it is the best time to buy Intel stock because it hasn't been this cheap for the last 15 years, but when it comes to Intel, it is just a bet. Yes, China, Taiwan, then if there something happens, Intel triples, so that's the geopolitical risk and reward positivity Intel offers, but it's hard to see improvements in the next year or two, so we'll keep on following, and I'm personally not buying, despite this being the best time to buy Intel, because this would be a great time to buy something if the fundamentals would be at least stable with possible future upside. And yes, there is always possible upside, but it's very hard to predict when and where that upside will come from. But if you want to watch it over the next few years, I think now it is the best time ever to start a position. There should be value in the investments, in the book value. There should be some kind, perhaps not yet margin of safety, but it's a good starting position if you want to start. Then if it goes lower, perhaps double down and then manage that position around, because it is as cheap as it gets. They spent more than 100 billion on Capex in the last 6 years and the market cap is less than that. If we'll keep using computers, etc., etc., there could be something for Intel, but again, I am worried about the competitiveness and the capacity of others that can just keep investing and throwing money. And if everyone is throwing money at AI chips, etc., etc., nobody will make money. That's simply the situation. That's simply business as usual. Nobody made money on internet providers, but the internet changed the world. Thanks for watching, and I'll see you in the next video.